So the first video is on the updated tax code, just to understand what are all the new situations with the new tax code that started in 2018 and how does that affect your charitable giving strategies. The first piece is understanding itemized deductions versus standard deductions. So you can either take a standard deduction or you can take an itemized deductions off your taxable income each year. The difference is going to be a standard deduction is a flat amount, and typically you take the higher of the two numbers. So the new code, the standard deduction are higher figures than they've been in the past. So 21 million more people are going to be taking standard deductions than itemized deductions. And so the reason that's so imperative to your situation and your charitable giving, most people aren't going to qualify based on their charitable giving each year to take the itemized deductions. Therefore, they don't get the tax benefits of giving the charitable deduction or the charitable contribution. So the other piece is they've limited some of the deductions on the itemized side in addition to charitable giving. The first would be what they call SALT or state and local income taxes, where you are limited to $10,000 a year in totality of all those taxes to deduct, including your property taxes on your residence. The last thing is your mortgage is now a lower number. You can only deduct up to a $750,000 mortgage. That's lower than it's been in the past. And so all these things combined make it much more difficult to do the itemized deductions as your most beneficial option. Therefore, when you give the charitable money away, you're not getting any tax benefit for that. So as you can see on the slide, it goes through some of the updated brackets on the individual side and the married filing jointly side. And the big divide there, the 8% increase from 24% to 32%, is a big piece for where you can strategize on where your taxable income falls in order to take advantage of some different planning strategies along the way. The only other piece that it would be relevant is just the figures for married filing jointly versus an individual tax filer for the standard deduction thresholds, which would be $12,200 and $24,400. Those are the thresholds that you need to have higher than that on itemized deductions. So as you can see on this next slide, it goes through your ordinary income bracket is the column to the left, then the long-term capital gains column in the middle, and then a net investment tax column to your right, which a lot of people aren't even aware of. If you have over $250,000 of income, you have an additional tax as well. So this is a really good slide for just how do we navigate the tax system. For example, one strategy that we do for planning would be a Roth conversion, which is just turning a 401k or IRA to a Roth IRA. You pay the income tax when you transfer it, but then it's tax-free the rest of your life after that. This chart is very good for that conversation because along with the Roth conversion, you can have charitable giving and they offset each other, so there's really no tax at that point. And that's a strategy you can take advantage of, and this slide is very helpful to plan some of those pieces to the puzzle.